Hi, I'm Jim Jubak, and welcome to this week's Quick Pick video. This week's Quick Pick is Pioneer Natural Resources. Ticker is PXD. Over the long term, I really don't like oil and gas stocks. I think we are indeed going to have to move away from fossil fuels. Short term, however, the transition is going to be very, very rocky. We're going to get a lot of price volatility. And one of the things about it is that if companies, as they should, if they have a longer term horizon, don't invest in more production, you can see a lot of big spikes in cash flow and also big turmoil since they weren't investing in production, we're going to see tight markets and higher prices. That's what we're seeing right now. We've had a pullback in spending on exploration and development, and consequently oil prices are up. I think we're probably going to hit 100 in the shortage. What that means is that if they maintain discipline, they don't go out and spend a lot of money looking for, finding, and then developing oil and gas that they're not going to be able to actually produce somewhere down the road. I think a lot of this is going to stay in the ground. You've got a lot of cash flow at some of these companies. One of the ones that looks most serious about maintaining discipline is Pioneer Natural. And what they've basically done is they've instituted a kind of two-tier dividend. There's a kind of base dividend, and that right now is about 2.5%. And that's sort of set in stone. As the company said, that's what we're going to pay out, 78 cents a quarter. And what they've also said is they're going to have a variable dividend that depends on cash flow, et cetera. And the cash flow from this company looks really, really high if we get oil and gas, West Texas Intermediate, trading at $86 to $87 a barrel. We're looking at, cash flow, positive cash flow of about almost $8 billion. A lot of this could actually go into the dividend or into share repurchases. They've just added a share repurchase program. So you're looking at a possibility of maybe the dividend going from the current $5.52 a share to maybe 3 or 4 times that. As you can see, this is 2021. What has happened in 2022, on the other hand, is that oil prices have gone up. Demand has started to come back after the worst of the pandemic has passed. People are starting to say, hey, no one's been doing any drilling. So you get this big ramp up in the stock price. I still think you're looking at a stock where, from a dividend perspective, because of the variable dividend, you've got a chance of taking home a very nice pot of money. So I'm going to add this stock to the dividend portfolio on the basis of the fact that I think you're just going to look for a big increase in that variable dividend from higher oil prices in the short term. Thanks for watching. If you want to see more of my stuff, including the dividend portfolio, you can go to my free site, jubakpicks.com, which has got three portfolios that it tracks, or my paid site, jubakam.com, which has 6 portfolios, including ETFs and what are those called? Options. So thanks for watching. Please, if you like this video, like it, subscribe so you get notification when the next one is up, and we'll see you next time.